We're celebrating something that should have been so clear-cut and normal, but it's not for Black Minnesotans and Black Americans.
No. George Floyd's younger brother, Pollis, tells Gayle King he'll continue to be an activist.
I'm turning my pain into purpose to be able to get out and help others all across this world, not just
COVID-19 pandemic is behind us. There are still many hurdles ahead. The St. Lucie County Board of County Commissioners is doing what we can to help residents and businesses get past this pandemic. The COVID vaccine is widely available in our community, and there's more than $10 million in financial assistance available to residents and businesses negatively impacted by the deadly virus. Visit recoverstlucie.org to find out where you can get the vaccine or apply for mortgage, rental, and small business grants. Remember, recoverstlucie.org to find out where you can get the vaccine or apply for mortgage, rental, and small business grants.
This is WPSL Port St. Lucie, the talk of the Treasure Coast.
Expressed on the following program are not necessarily those of WPSL. However, you're encouraged to like and share them on social media. It's time for the Mike and Victoria show. Of course, Mike is Mike Pollis with East Coast Mortgage, and Victoria is Victoria Loyd with Remax. East Coast Mortgage Lenders is a licensed Florida mortgage lender, servicer, and MLS number 353429. And now it's Mike and Victoria.
Hi, everybody.
First, go ahead, Victoria.
No, I just wanted to say hi to everybody, and I'm so excited. We have a guest speaker today that Mike brought on. So Mike's going to tell us all about it.
Yeah, one of obviously being a mortgage lender here, one of the most important things we check is credit. Obviously, you have to have some decent credit to get a mortgage today. And we have a specialist in the industry, Mark Chetta from Certified Credit. Now, Mark doesn't deal directly with the public, but he deals with companies like ours, helps us get through some of the really difficult situations that people have. He's not a credit counselor or a credit company that fixes your credit. He's a provider of mortgage credit reports, but he is probably one of the most knowledgeable people in the industry. And he has really helped me out quite a bit with understanding credit, what to do to protect your credit in today's market. And also he just provides a bunch of different services for us. He gives us very good tools to help us evaluate credit and helps us evaluate credit and give you a plan to put you in the right direction to get your credit restored. Mark, maybe you could tell us a little bit about your background and your company, and tell us what exactly you do for us.
Sure. Thanks, Mike. And thank you, Victoria. I'm really excited to be on the show today. So I appreciate you guys having me on. So Certified Credit, as Mike mentioned, we're a credit reporting agency. We deal primarily in the mortgage industry, providing mortgage credit reports for mortgage lenders and brokers, banks that do mortgages across the country. And we've been in business for over 35 years. I'm celebrating my 21st year with Certified Credit this summer. So they have been a phenomenal company for me, and being in the sales arena, just provide phenomenal support for our clients like Mike at East Coast Mortgage and the other clients that we service. So we are again in the credit reporting business, just strictly on the mortgage side. And, we're fortunate to have clients, or what I like to call partners, like Mike at East Coast. We've been doing business together for a super long time. And, we certainly appreciate that partnership. So.
Yeah. So, one of the things that Marks provides is a tool that allows us to go into your credit report and change things, unfortunately not on a permanent basis, but it allows us to change data on the credit report, like balances on credit cards. What if you resolved an open collection account? and it's called a what if simulator. And that's exactly what it is. It's what if you do these things? What effect would it have on your credit? So Mark, maybe you can elaborate on that tool, because that's helped me out and helped customers out tremendously over the years.
Yeah, absolutely. So, we provide our mortgage clients with online credit score simulation tools, and the What If Simulator and the Wayfinder are two products that, Mike and his team are able to go in and, if they're looking for a specific program that needs a 620 credit score and we're at a, right at a 600, just like Mike had mentioned, they can go in and simulate, well, what if we paid off $500 of this credit card balance? Click simulate, and it would simulate what if that borrower was to make that payment on that card, and now the new balance is $500 less. So the simulation would show that running through the score models, and recalculating the score to show the potential improvement in the score. The Wayfinder is a great tool that actually they are able to print out a little game plan that says, if you were to pay off this, or if you were to take care of a disputed account, here's what the game plan would put together and, potentially raise your score. So these are simulations and don't change anything, unfortunately, until the borrower actually puts those plans into place and actually makes the payment, or sends the documents to Mike and his team to, to get that information updated.
Yeah, and you said that, sometimes you can pay down a credit card, and that's called debt utilization. And maybe you can elaborate on that, how that affects people's credit scores, because that's the number one tool that I use, paying down credit cards to increase your credit scores.
Yeah, so, and Mike's right on with that. And that's the first and foremost, the important thing to work with a company like East Coast Mortgage or Victoria, at Remax that, is been in the business forever and knows the industry. So super important to have that information. And Mike's right on with, credit card utilization is the fastest, easiest way to move your credit scores in a positive way. So really the credit scores, by the way, you don't have a credit score until somebody pulls your credit report and it runs the data through the credits, through the credit score models. So that creates your credit score. So everyone's credit score is constantly changing every month as they make payments to their mortgage and their car payments, and they pay down, especially their credit card balances. So that's what we key on, because the more maxed out you are on a credit card, say your credit limit is $500 and you owe $450. If you were able to pay off $400 of that card, you might potentially be able to move your credit score, 20 points. And that's a pretty big jump versus, paying off of like an installment loan, like a mortgage or like a car loan, doesn't move your credit score in the same manner that the credit cards do. So it's really important to have, again, an experienced veteran like Mike that knows, let's focus in on the credit cards. I need 10 points to get them to this next program level. The score simulator showing that if we pay off the card, we can get 15 or 20 points. So that puts us right where we need to be.
Yeah, and like Mark said, a lot of the mortgage programs do require a certain credit score, but even if you are well qualified, a higher credit score can get you most of the time a better interest rate or better terms on your loan too. So credit score is everything in our industry. And I'm sure our listeners have a lot of questions for you, Mark. So I'm just going to give the phone number here. It's 772-340-1590. That's 772-340-1590. This is a great opportunity for our listeners to ask, a seasoned professional in the credit industry, what drives credit scores? What can I do to improve my scores? How do I protect my credit scores? Now, that's an interesting concept. You're just hearing a tremendous amount of information out there about credit fraud and people stealing identities, services that are provided to protect your identity. Mark, I know that you are truly an expert in that field.
Yes. Would you like me to expand on that just a little?
Yes, go ahead.
So thanks, Victoria. So, I had explained to Mike that, my wife and I, unfortunately, in the last few weeks have become the victims of identity theft. And, I've done, seminars with Mike in the past with his realtor partners. I do an educational seminar on credit and a lot of the things we're talking about. So, my recommendations have always been, first and foremost, if you haven't pulled your credit report in a long time, you have to pull a copy of your credit report. Hopefully, you're out looking for homes with Victoria at Remax and, Mike's pre-qualifying you to do the mortgage. But if you're not in that situation, and you haven't pulled your credit report, annualcreditreport.com is the website to go to get a free copy of your credit report once a year from all 3 of the credit bureaus. So first and foremost, your protection is knowing what's on your credit file. Too many times do we have clients, call in and, oh my gosh, Mark, I pulled this applicant's credit. He had no idea that these 4 credit cards were even on his file. So he's been the victim of identity theft and he didn't even know that that was happening. So that's why first and foremost, number 1 is get a copy of your report. If you're looking for a mortgage and you're looking for a home, absolutely work with Victoria at Remax and Mike at East Coast. Have Mike pull the credit. Evaluate the credit, make sure that everything is correct, make sure that there are the right trade lines that are on your file. And a trade line is, your credit card or your mortgage or your car loan that's reporting that information. So that's step number 1. Step number 2 is absolutely get some sort of credit monitoring program. There's a number of them out there. Each one of the bureaus offers a protection plan. I don't endorse one in particular. The one that we do use is Protect My ID, and it's actually owned by Experian, but I'm in no way endorsing that as, whatever. I will tell you the reason we're hooked up with them is we have AAA for the kids and for my wife and myself for our cars, and you get a discount through AAA if you sign up with Protect My ID. So credit monitoring, what that program does is it alerts you anytime something happens. So if somebody's pulled your credit report, you get an alert. If one of your balances changes on your credit card, you get an alert. If somebody opens a new account, extremely important in the identity theft arena, you are alerted. So you're constantly, without pulling your credit report, being notified of changes to your report. And you can log in and you get free copies of your report. Now, these programs are available through your banks that you do business with, through your credit card companies that you do business with. We've all seen when we're online paying our credit card bills, view your FICO score. So that, they're all linked in, and it's really important to find one and do credit monitoring. And then my third most important thing is to either freeze or have your credit file locked. So when you're freezing or you're locking your credit report, that means that nobody can pull your credit file unless you've unlocked or unfrozen your report. So what's really important, and Mike and Victoria stop me because I tend to get on a roll, so jump in there and keep control of me occupying too much time. But what's really important is that nobody is ever allowed to pull your credit report without your authorization. So that's a big key right there.
But they do it, Mark, all the time.
Yeah, so now there's a couple of instances like the banks and the credit cards that you do business with, when you sign up to do business with them, you've given them the approval to pull your credit with a soft pull, which, more terminology is coming out. So typically what happens in the mortgage arena or when you're applying for a car loan or a bank loan, those are called hard pulls, which means that those inquiries show up on your credit file. They do deduct a couple of points from your credit score. But a soft pull is what happens when you pull your own credit report through the bureaus themselves, or you go to annualcreditreport.com, or you click the view FICO score from your credit card. A consumer credit report is a soft pull. So your banks and your credit card companies, when you sign up with them, you're giving them permission to do that. And they're doing it to, extend you more credit, to maybe raise your credit lines, or, provide you with more points to, if you use the card, you get more points. So soft pulls and hard pulls are 2 different categories, but Victoria is absolutely correct. They're in there pulling that credit report on a soft pull, without your authorization, and they don't need that because you're actually doing business with that company.
I have a question for you, Mark. So a
ma'am.
lot of times I've heard this, and I don't know if this is true or not, that, so you have 5 credit cards and you have credit limits, 2,000 on one, 5,000 on another, but you haven't used them. How does that affect somebody that has high credit limits, even though they haven't charged a lot of money on it? Is that affecting us?
Yeah, so I mean, that does have an effect on your file. What really makes the biggest change is when you have balances that you're paying and you're, paying off, or you're charging up balances. So what really happens is your credit score is calculated at the time somebody is pulling your credit file. That's why it's super important that, if you're interested in buying a home and you've contacted Victoria, that she's out showing you a home, that's the perfect time for Mike to jump in there and pull the credit file and give us a gauge of where are we at today, because your credit score is only really being calculated the day that it's pulled. So if those credit card balances are 0 and you have very low credit card balances on your other cards, then your score should be relatively high, as long as there's no derogatories like a collection, or you've missed a car payment, or gosh forbid, if you're trying to do a mortgage, please don't ever miss your mortgage payment. Miss the other payments, but don't miss your mortgage payment, because that one's really difficult from a score standpoint and from, Mike being able to do a refinance or getting a new loan kind of thing. So it just really depends on where those balances are at the time that your credit file is being pulled.
Okay, so even though I have a $2,000 credit line and I've only have $500 on it, that's all they're going to look at. They're not going to say I have the possibility of charging another $1,500 on it.
Well, that is calculated into it, but it's not as important of an equation as the actual
the
balance
dollars
on it. Correct.
Okay,
Yes, ma'am.
that's great. And then then you go in, and I made a correction on I've paid them off. I paid all my credit cards off. How long does it take for me to find out if my score has gone back up?
Yeah, so all the creditors report once a month to the credit bureaus. So let's take credit cards, for instance. You can look at your credit card statement and you have a cycle that shows when the open date is and when the closing date is. So whatever your balance is at the closing date of your cycle, not your payment date that's on the credit card statement, because there's 2 dates there. So your payment date is just when your payment is due, but the closing date on that cycle is typically about a week after the payment date. So what's really important is that they're only being reported once a month, and they're being reported generally within a couple of days, a day to 2 or 3 days after that closing date. So just once a month is when that information is reported.
And then the next killer. So I have my credit card and I have a $2,000 balance on it, and I don't want that credit card anymore, and I cut it up. Doesn't that hurt my credit worse that I close out that account that way?
Well, what's really, really important is to never close a credit card account that has a balance. So you want to pay that balance off first, so that that card is being showed as a 0 balance before you close that card. And really every single credit file, they're like fingerprints, are completely different. So what I have on my file, Victoria, is, you could have similar accounts and our scores could be drastically different. But if you were to cut up that credit card, as long as you had 2 or 3 other credit cards, then your scores shouldn't really change or be much of a difference. But if that was, you say, 1 of 2 credit cards, then that potentially could be a worse situation, because now you only have 1 card reporting to your credit file.
And we need at least 3 lines. Is that correct, Mark?
Yeah, I mean, honestly, like 3 to 4 credit cards is really kind of the ideal scenario to try to maximize your score, and then keeping very, very low balances on those cards.
Yeah, and the reason I was saying that, I just heard that, a lot of people get these credit cards that say, oh, you've been approved, here's your card. And people say, yeah, I'm just going to cut them up. I don't want them anymore. Or they use them, like you say, for a short period of time. So if they pay off their balances and they don't owe anything on it, they want to close out this account, they can close out the account. It's not really going to affect their credit score.
Yeah, as long as they have other credit card accounts, on
to keep building their credit. Exactly.
Because there's different
that's good
categories. It's really important to have the credit card category covered, have your installment category. See, the mortgage scores are very different than what you see on the consumer credit reports. Let's just use Credit Karma, for instance. It's a great tool for people, to keep an eye on what's happening with their credit. But Credit Karma is actually a different algorithm to create the scores. So there's consumer scores, there's mortgage scores, When you go to buy a car from a car dealer, they get a separate score that's called the car dealer score. When you,
Wow.
you know, there's attorneys that do bankruptcies, that there's a bankruptcy score. So every industry has their own credit score model. And what's really, really important is that, you know, we're focused in on, we provide mortgage credit scores for, you know, Mike and East Coast and the other mortgage lenders in the community. But they're going to be very different than the Credit Karma score or that score that you see when you click on View FICO from your credit card, because those are also consumer credit scores.
Right. And we've seen that. And that's the problem, because everybody believes everything, you know, that they see, and it's not always that accurate. We had that problem. We had this is interesting. We had somebody, you had to have a certain credit score to get into a complex. You need to have a 700 score, and they had 699.
Oh.
Even though they had gone to these outside ones and there were over 700. Of course, we got in with a little bit of me being feisty, as we call it, and we got it done. But
Right.
we were so close. That was almost a point of ridiculous.
Yeah, most of the tenant screening industry, the scores they provide are more similar to the mortgage credit score than they are the consumer credit score.
Well, this wasn't even a rental. This was an actual purchase. You almost think that was a form of discrimination.
Oh,
Like
gosh.
Mike said, I can get you a loan on the scores, and they won't let you in unless you had a 700. Matter of fact, he did the loan, and that we got it done.
Yeah. Well,
Yeah.
that's because you guys work together as a team, and that's why it got
Absolutely.
done, because you're seasoned professionals. That's right.
Yeah, she was crying on the phone, like, "Oh my gosh, they're going to turn us down in the interview, and they won't tell you your score until they won't use the scores that you've pulled, and from Mike, but I got them to use them, and they when they pulled it up from some kind of credit bureau that I wasn't even familiar with, and she was crying her eyes out, but we got it all done, and you're right. You have to be with people that understand it enough to be able to get it done for you.
Yeah, almost everybody that I pre-approve or pre-qualify, they always come to me and say, "Oh, well, my credit's good because Credit Karma tells me I have over 700 credit score."
Right.
And almost always, almost 100% of the time, the Credit Karma score is always higher than what I pull on the mortgage credit score. And Mark, do you know what emphasis they put on different types of accounts to generate those kind of scores?
Yeah, so, you know, not in particular, because here I am almost 30 years, believe it or not, I can't believe that, in the industry. And there's still a lot of mysteries around this. But, you know, from what we've gathered is, you know, the Credit Karma uses a consumer scoring model. They actually have created somewhat of their own scoring models. So they're a lot more lenient on things like derogatory credit, like paid collections, or, you know, you've missed a credit card payment in the past, or, you know, your credit might be, you know, your credit card might be maxed out. Whereas ours are, you know, look, in the mortgage industry, we're lending money. So they're very, very strict, the algorithms. And it's probably time for an update, because our algorithms are going back to, you know, when Fannie Mae and Freddie Mac created, you know, the desktop underwriting and the loan prospector, the automated underwriting systems. So we're going off of credit score models that were created, you know, 15 plus years ago that probably could use to be updated. But primarily, I think the consumer models are a lot more lenient on the derogatory credit. Whereas, Mike, you know, a $50 medical collection can drop somebody's credit score on our reports, you know, 60 points very easily. I don't think you see that so much on the Credit Karma or the consumer models that you would get from annual credit report. Or
Well, that's because they want you to keep coming back. You know, they have their ways, they have their advertising and their ways. They want you to keep coming back.
Right. You know, look, the mortgage industry, they're lending you $300,000, $400,000, $500,000. They want to be strict and know that, you know, you're going to pay them back, kind of thing. So I think that's where that comes from.
So Mark, one of the things we do, obviously, when we pre-qualify somebody, we pull their credit report. And if your score isn't quite there, or maybe we can improve upon it to get the score up a little bit, maybe that'll qualify you for a lower interest rate. You know, one of the things like we already touched on is you can pay down credit cards. There's things we can do to generate those points typically. Now, if you need 100 points, that's a little bit more challenging. But if you're going up maybe 10, 15 points, that normally is doable. Now, when you pay down a credit card, we already said that the credit card companies will report to the bureaus once a month. So that could then take about 30 to 45 days to eventually show up in an improvement in your credit score. But one of the products that you offer is what's called a rapid rescore. So if a customer then goes and pays down their credit card, they can then get some evidence from the credit card company, usually on their letterhead, and we provide it to you and you present it to the credit bureaus. And can you tell us a little bit about that process and how that works?
Yeah, so again, that's a unique process that's, only applies to mortgage lenders. So it's, not something that we service the public with or anything like that. But so basically the Rapid Rescore program is a way to expedite data being sent to the bureaus faster than what normally would be done. So in Mike's situation, somebody pays a credit card balance. What's really helpful these days is that they can jump online the next day, because once they make that payment, we have to wait 24 hours for that payment to process through the system. And if they logged on to their online account, they would see that that payment was made and that the new balance is now, let's say, $500 less. So you could print out actually an activity summary and then provide that to my office. And we have a team of folks that work our rapid rescores. So what we do is then we take that document, that activity summary or that letter from that creditor, we send it to whichever bureau that you want to send it to increase the score for that bureau. So what's really important is that everyone knows that, we pull our data from Equifax, Experian, and TransUnion, and the mortgage industry uses the middle score to go off of to underwrite the loan. So a lot of times we can just do a rapid rescore with maybe just one bureau. And we would send that letter to the bureaus. They would verify the information. And then typically the turn times from the time Mike sends us that document to the time that we've sent it to the bureau, they've updated their system, because once they verify it, they'll go into their system, they'll change the balance, showing that that payment was made. And it takes 3 to 5 business days. And Mike's able to pull a brand new credit report, because then at that point you have to pull a new credit report for the new data to flow through the algorithm, the credit score algorithms, and create that new score. So that's where your score changes, is when your credit file is pulled and the data that's on file runs through the credit score algorithms, that's what creates your credit score. So 3 to 5 days, once Mike sent us the document, he's ready to re-pull that person's credit report and then see that balance is now different. And hopefully we have those 15 or 20 points that we were looking for.
Perfect. Mike, give the number again.
Okay, if anyone of our listeners want to call in, ask Mark a question, or myself or Victoria, the phone number is 772-340-1590. That's 772-340-1590. I'm surprised we haven't had any listeners call, because this is a great opportunity to discuss what you can do to protect your credit, to improve your credit. It's really getting a free credit consultation. Just give us a call.
Yeah, perfect. Yeah, come on, people, call in. You're calling us every day asking us how to do it. Now we've got the professional with us that can really help you and answer all those questions.
So I have something to add if you guys want me to jump in with something that might be helpful.
Yes.
Yeah, so in the mortgage, and this also applies for the auto industry, but in the mortgage industry, you have a 30-day window to have your credit report pulled by multiple mortgage companies, and it will only deduct points from the score one time within that 30-day period. And the reason I bring that up is because, there's a lot of people in the mortgage industry and in the real estate industry, and especially newer folks that have just gotten in that don't have the kind of experience that Victoria at Remax or Mike at East Coast has. So the reason I bring that up is if you say you went to somebody, a mortgage company, one of these big guys that do all these refis, and, their business model is a little different, and you weren't happy with that particular person or what that person told you, even if they've pulled your credit report, and you walked out of there and said, I just don't have a good feeling about that, or they referred you to a realtor that you're just not comfortable with and didn't have, the inventory that maybe Victoria has to look at, you can go see Mike and have your credit file pulled and have somebody that's, has many, many years of experience in the industry, and sit down with Mike to come up with a game plan to work with Victoria. Don't feel like you're trapped because that one person has pulled your credit file and that you can't go see somebody that's been in the industry like these two for a long time and get another opinion, and see what else they have to say. Because, you know, there's a lot of companies, and, you know, I'll use initials like LP, that do all refis, or, you know, the guys who are really fast and like spaceships, you know, that are not like Mike. You know, Mike is a seasoned veteran that's here to help and to guide and to counsel you on something as big as a mortgage, where those guys are order takers, and that's all that they're about. And, you know, they're not interested in, you know, I live actually right down the street from Mike. Our kids played soccer together. Me and Mike have coached soccer together. He knew I was going to talk about that at some point on this call. But, you know, those are one of the things. You know, he has a relationship with Victoria. You know, that's what's really important, is don't feel like you're trapped just because you went to see one person. You know, go and see Mike and talk to Victoria and get a different opinion. You're not just stuck with that one.
Well, I just had that experience, Mark, where the young gal, she's first time home buyer. She went to her bank. Now she was coming for help because somebody, I guess, who she was seeing with the bank and another real estate agent, which I don't know who they are, you know, we're telling her certain things. And as she's telling me, they just didn't come together right. And that's when I mentioned, please, you know, I've got somebody that's in the business, that there are other programs out there for you. You know, she was kind of dead set on, this is how much money I need down, this is where I need to buy. And it just wasn't coming together. And I said, but there's so many other options out there. Because her thing was, should I buy now or keep saving money and wait till later on? Well, as we know, if we go in this direction and the prices keep going up and up and up, it doesn't make sense. Really, this is some of your best time to go for it and to buy. So the first thing she said is, I don't want him to pull my credit score because I don't want to have a problem. And I said, don't worry, because he can talk to you. And she already knew what her score was. But that's a good point that you have there. So where does the 30 days start? If I went to Mike today, and this was my first 30-day window, is it from the window from the first time I start, I got 30 days to do whatever in that 30 days?
Yes.
When does the window start?
Yes. Yeah.
Okay.
So it would be today, the day that you went. If Mike was the first one that you went to see, which you wouldn't need to go see anyone else after you went to see.
Of course not.
But the 30-day window would start today, and then you have 30 days from that inquiry date to have, you know, a couple of other polls done. So, and you bring up a great point, Victoria. We do business with banks. We do business with mortgage brokers. We do business with mortgage lenders. And a lot of these banks are tied to, they only have a couple of programs where, you know, Mike's business is set up where he works with a multitude of lenders, and his goal and his team's goal is to find the best interest rate and the best deal for that particular borrower at that time, and not be tied to, okay, this is the one program the bank really wants me to sell, so this is the loans that I'm going to do for them. So,
and that's absolutely true. But the thing of it is, and what we're finding out there, Mark, and she kind of went in a little tailspin, and I think they become overwhelmed because in some ways I think that they just don't understand, so they don't know who to trust anymore. Let's put it that way.
Sure.
And when I said, please, I'm only trying to help you because there's so many, you can use whomever you want, because I don't steer anybody, but I want to give everybody the option out there to know what other programs are out there. And not every mortgage has the same amount of money down, the same amount of closing costs, you know, the same everything. And she didn't understand that. And that's what I was trying to educate her a little bit, to let her know she had substantial money that she could have bought right now and make it really work for her in her way.
Yeah, absolutely. Well, Mike, remember the one that, you know, I referred to you not too long ago. One of my really good clients had a loan that, you know, his company just wasn't in a position to do. And, you know, the loan officer called me, and, you know, Mike was the first person I thought of. And, you know, I'm fairly confident Mike talked to the borrower, and, you know, because he deals with so many different lenders, you know, I believe that he was able to put that deal right together. And, you know, my existing client that referred him over was happy that the borrower was well taken care of, even though he wasn't able to do the loan. You know, he knew that the borrower was in great hands, and Mike was able to get the loan done. And, you know, the person actually was kind of a friend of mine too. So I was just happy that, you know, my network of people with reaching right out to Mike, you know, that they were able to get the loan done, and then the borrower was in good position, and he was so excited and so happy with Mike and his team for being able to get the loan done. You know, so it worked out really well just to have a network of experienced people that can get that done.
The other thing that people don't understand, Mark and Mike understands this also, is they think they need a lot of money down to make their payments so much less. And that's not true, because every $1,000 is what, Mike, $4 or $5 in a payment?
Yeah, I mean, you really, to get your loan down by paying down the loan to get the payments down, I mean, it's only about $4.25 per thousand. So $10,000 extra down payment's only going to change the payment by about $42.
Right.
Wow.
You know,
So what does that tell you? I can sell you a home that's, a lot of people get qualified, as Mike will tell you, and he gives them a range, and everybody wants the lowest range that's out there because they want to keep their payments low and they don't want to have a large mortgage. But if I can find you such a more superior home for $10,000 more for only $42 a month, why wouldn't you go for that?
Yeah, especially in this market too, when it's so difficult to find a house or get under contract because there's so many competing offers. You know, people are hesitant to go over and above the asking price because they don't want to pay the extra mortgage payment. But in reality, a $10,000 overage over the asking price is only going to change the payment by about $42. That may make the difference between getting that house and not getting the house. And again, in a very challenging market, when there's very little inventory out there, that's probably what you need to do.
And then $42 would be, let's say, in your monthly payment. And as a down payment, depending on the program you're with, whether you're 3.5%, 5 or 10, that's still not a great deal of more money you need as a down payment either.
Correct.
So it all works out. And that's why we're here for you. We are here to show you the programs, which I tried to explain to this young girl, is we're here to show you your options. That's all it is. You know, we're not steering you. We're not making you do anything. It's just saying, hey, if I can give you A, B, or C, which one would you rather go with? And it really works well for people that want to sit down and talk with us.
Well, you know, Victoria, there is a misconception out there that banks have a lower interest rate than a mortgage broker or a mortgage lender. And that's absolutely not the truth whatsoever. You have to understand that a big box bank has a lot of overhead, a tremendous amount of overhead, a tremendous amount of regulations placed onto them. Just think about every regulation they have to have an attorney to interpret that. That all comes at a cost. With us, we're not a heavily regulated company like a bank. You know, our overhead isn't nearly as much. That allows us to take our savings and pass it along to the consumer. And it also allows us to shop many different lenders. So, you know what, if you're really concerned about all these inquiries on your credit report, even though you don't have to, you know, you just have to come to a company like us, because we're going to take that credit report and we can use that credit report with multiple lenders that we deal with. So it's one credit report, it's one appraisal. We have not only a lot of different programs, but we have a lot of different experience here. A lot of times we could use the same programs that the banks use, but we're a little bit different because we can structure it different. You know, if you're having difficulties coming up with the down payment and the closing costs, what we can do is, you know, Victoria and I can test the market a little bit. We can structure it in such a way that maybe the seller would be interested in taking a higher price on the house and also maybe contributing towards some of your closing costs. Now, granted, that's getting a little bit challenging in today's market, but it's not unheard of.
No, and I'm having that problem, Mike, as you know. We went in, we went $20,000 more than the asking price, and we only asked for 2% of the purchase price to go towards it, which was like around $5,200, part of their closing cost and their prepaids.
Mhm.
And other people didn't ask for that and went over $20,000. So that's happening out there. So we are having a real problem with that right now.
Yeah.
And a lot of the agents out there, real estate agents, are not wanting to take FHA, which is really kind of scary because we've done it FHA for years after years.
Mhm.
And that's creating a big problem also.
Yeah. Of course, our biggest competitor for us is cash offers. It's when I'm pre-qualifying people and they're putting minimum amounts down, it's difficult to compete against a cash offer. But if you get pre-approved, where you have all your ducks in a line, you go in there with an approval letter. I mean, literally, it's as good as cash.
Well, that's what a lot of people say, because they'll say, no, I want to pay cash, so they want a larger discount for cash. And a lot of the sellers are saying, hey, at the end of the day, the bottom line's the same. You know, I'm still going to get my money. It just might take a little bit longer. So some people just feel that if it's cash, then they don't have to worry in case the loan doesn't get approved.
But Mike, isn't this the perfect time really to be getting a loan with these interest rates as low as they are, instead of taking all of your cash and, you know, buying a home for cash outright? I mean, to take advantage of these low rates.
Well,
We call it free money, Mark. Free money.
That's what we're seeing with a lot of cash buyers. They're writing up cash offers, but that doesn't prohibit them from showing up to closing with a mortgage. So what you could take advantage, if you have the ability to pay cash, but you don't want to because you want to take advantage of the low interest rates, you can simply put a cash offer and then you can show up to closing with a mortgage.
Yeah, but you better tell them at the time that you write the contract that you're guaranteeing it as cash, but you're going for financing, because they get a little upset when sometimes they hear, oh, we got to have an appraiser go out, or, oh, we got to have this happen. And they get a little upset because you didn't tell them. So you really need to tell them.
I think we have a phone call.
Glenn
Good.
is on line 1.
I'm sorry, who do we have on the line?
Glenn is on the line.
Hey, good
Lynn?
morning, guys. I just have a brief question. I own a property here in Fort Pierce for 5 years. It's acreage. We live on acreage and a couple acres of land in Midway Road area. My question is I've had a mortgage with Westar for 5 years, never had a late payment, but my credit score is mid-6, 650. I'm asking you guys, is it better to try to go back and refi with the company that you're already established with, knowing that I'm sure they have great promos also, or is it better to go somewhere else at this point?
Well, first we have to ask you to turn down the radio because we missed a little bit of that because of feedback. But you said that, is it better to go back to the same mortgage company? Is that what you're asking?
He said his score was a 650, Mike.
Yeah.
And that
Okay.
it was kind of low, and he wasn't sure if he should go back to the same mortgage company.
Oh, well, if you're, well, no, it doesn't really benefit you whatsoever to go back to your original mortgage company, because remember, all of these loans, they're all sold to Fannie Mae, Freddie Mac, FHA, VA. They're all either insured or sold to them directly. So every scenario, every time you go back and get a new mortgage, you are going to be, you're pretty much going back to the starting line. They're going to pull a new credit and they're going to treat you like they've never met you before. It's not like the old days when you went to the old savings and loan and Joe Bob down there and you shook his hand, they gave you a loan because you knew each other. It just doesn't work that way. Every mortgage has to meet all the qualifications of today's guidelines. So the best thing to do is if you're concerned about the credit score and what it will do to the interest rate or whatnot, is let's take a look at it. Let's pull the credit report. Let's come up with a game plan using some of the tools that Mark's company has, where we can put you on a track to increase your score before we even get to that point. One of the things that we can do that most lenders don't do is when we take our mortgage application, we can use that 650 score. All right. So if your score is 650, maybe it doesn't qualify you for the best interest rate out there, but it allows us to start the process. And when we start the mortgage process, what we can also do is start coming up with a game plan to improve the score. So if we can improve the score by the time you close, then we can go back and we can get you the better interest rate, even though you didn't start with that score.
And I'll just throw in there too, it depends on when was the last time that you had your credit pulled that you know that it's a 650. Because if it was a couple years ago and you've had a loan that you've been making payments on time and everything else is good, you may have a much higher credit score and not really even know that. to where, Mike might be able to put you in a better interest rate or something like that. So if it's been a long time since the file was pulled, the credit file was pulled, I would definitely get a new copy, contact Mike and, have him re-pull it to make sure that that's really where you are.
Yeah, and that's a good point, because a lot of people they don't pull it, and they only go based on what somebody's telling them instead of the factual.
Yeah,
So it
or
does
they
make a
might
big
be-
difference.
Or they might be looking at one of these other credit scores like the Credit Karma, which it really is irrelevant in our business.
But if that
That's
was a
true.
650 that he had when he did the mortgage 4 or 5 years ago, and he hasn't had a mortgage report pulled since then he definitely has an outdated, some outdated information there.
Yes.
Perfect. That's good. That's real good. So if anybody else wants to call in, we really appreciate the call. We're sorry we lost you. It's 772-340-1590. That's 340-1590. Please give us a call. We're waiting for you.
And Mike, and Victoria, I have another tip just to throw in if you guys think that it would be helpful.
We'll take them all. We're going to suck you dry today, boy.
Okay. So what's really important on the mortgage credit side is that you have a mix of installment loans as well as revolving accounts. So your revolving accounts are your credit card accounts, and your installment loans are your car loan or your mortgage or a student loan. So what's really important is our credit score algorithm really wants to see credit cards as well as installment loans. So, just kind of bringing home, what our score really, the ideal, data on the file is looking for is a mix of those two.
Oh, that's perfect.
That's very true, because I personally have experienced this. I had a car loan, and that was really, I had a couple credit card accounts. I had a car loan. I have a mortgage as well, but I figured, well, I didn't need the car loan. It was at a higher interest rate. I had some extra cash laying around. So I paid off the car loan, thinking that was going to improve my credit score. And quite the contrary. After I paid off that car loan, I no longer had any kind of installment loan history on the credit. And Mark's right in the sense that it wants to see not only credit, and good credit, but it wants to see a variety of different types of credit.
Yeah, the installment loans I've seen, just like Mike said, somebody paid off, a student loan or a car loan before they went to get the mortgage, and their scores were higher before they did that. And now all they have is the credit card. And not that they're terrible scores, but they could have been higher had they kept that loan and hung in there. So again, that's where it's super important to go and talk to somebody like Mike, to get the right advice before you make the decision, because, it's crazy. I've been in the credit business for so long that some of the things make absolutely no sense that improve your scores. And unless somebody tells you, hey, look, if you're trying to get a mortgage, this is really the best thing to do right now. Once we get the loan and you've made a couple payments, then do, what it is that you're looking to do. But some of these things help to keep your scores up higher to ensure that you're going to get that better interest rate.
And
What's the highest credit score you can have, Mark?
One of the bureaus is like an 840. They're a little bit different, but in that 840 range.
Okay.
And one of the things that I've experienced with some of my customers is sometimes they've had older collection accounts, maybe an old medical collection, maybe it's like 3 or 4 years old. And then they decide, well, I'm just going to go ahead and pay that because that's going to increase my my credit score. So Mark, how can that affect you in a negative fashion?
Yeah, so see, that's the advice that you can get that could hurt you, because common sense says, oh, paying off this collection, that makes perfect sense. And it does in the real world, but in the credit world. So what happens is, if you have a collection with a balance and that collection company, stops reporting that collection. So these creditors, by the way, are all charged a fee to send in this information to the credit bureaus once a month. So some of the creditors choose not to do it sometimes for a cost savings. So say a collection that was, 4 or 5 years old stopped reporting, and Mike looked at the credit report, and the date reported means when does the creditor send the information to the bureau, was 4 or 5 years old. Well, that is in our algorithm, credit score algorithm, considered an old derogatory account. So it's not affecting your score as much as if that was a recently reported account. So if you actually pay that collection off and change the balance to 0, and now all of a sudden the date reported is brand new, our credit scoring algorithm actually reads that that's a recent derogatory account. Makes no sense. I understand that to everybody. But now you have a recent date with a 0 balance that's actually worse than a balance with an old date, because as the older derogatory accounts go, like if you've missed payments or you have lates or something, the older that stuff is, the less of an effect it has on your credit score negatively. So the more recent that derogatory information is, the more it hurts your score up front. So you could have gone to go see one of those persons, and I think I said the initials wrong earlier, say it LD, not LP, or the Rocket guys or whatever. They may say, oh, just pay off all your collections and then come back. Well, all you did was completely destroyed your credit score, and now you're going to get a much worse interest rate than you would have getting the right advice from somebody like Mike that, can help guide you through that process.
And, I have access to people like Mark. I mean, I have access to appraisal management companies, all kinds of different sources. So when a customer comes to me, what I do is I run their credit report. If I have any questions, I reach out to a guy like Mark. He points me in the right direction. I use his tools that he provides us to put our customers on the right track to get them approved for a mortgage. If there's issues with appraisals, then I go directly to the appraisal management company. I have discussions like this with them. So I have a lot of different sources that most loan officers that work for big box banks, big box lenders, they don't have access to. They just have access to their managers who may or may not have the right answers. I'm not saying I have all the right answers, but I know where to find them, and I have these resources to find those answers. So if you're interested in getting a mortgage, having me take a look at getting you pre-qualified, taking a look at your credit report and point you in the right direction, you can reach me, Mike Pollis at East Coast Mortgage Lenders, 772-285-0315. Again, at 772-285-0315. And I'd love to be able to help you.
Yes. And I'm Victoria Loyd with Remax of Stuart, and I'm there for all of your real estate needs. I can do residential, commercial, rentals, anything that's out there I can help you with. So dial me up at 772 area code 201-8740. That's area code 772-201-8740. And as I say in my commercial, I'm on it like a hip pocket. So if you need my help, I'm there for you.
And I'm just going to expand real quick because I know we're wrapping up on what Mike said. We actually do business with quite a few banks and lenders that don't offer that rapid rescore program that we talked about. So there's some banks that just don't offer that, even though we have that as a service. That's not something they provide to their clients. So that's something that Mike at East Coast does offer that, some of the big banks, like I can tell you the big national banks, they don't allow that rapid rescore program for their loan department.
And this is what I try to tell people, Mark. You're going to go into these lenders, and they're going to go in to the mortgage companies can help you. Where you go into a bank and they pull your credit, they're just going to deny you. They're just going to turn you down. When you go to a mortgage broker like Mike, he can look it over and tell you what you can do to fix it. And that's where your big difference is.
Okay, well, Cliff's giving us the high five, sons. So we're gonna end the show here. Thanks everyone for listening. Until next week.
Yes, and thanks for calling in.
Mike,
Thanks for having me.
Victoria on WPSL Port St. Lucie, the talk of the Treasure Coast. The time right now is 12 noon.
This is CBS News on the Hour.
Good show, guys.
Right. Awesome.
Yeah, thank you.
All right. Take care. Have a good one.
You too. Happy to do it anytime.
Thank you.
Take care, guys.
Good show.